All right, so we're living through a pretty interesting time in crypto, aren't we? Prices are hitting numbers we've only dreamed of, but the vibe is different. The usual all-out hype just isn't there. So what exactly is going on? That's what we're going to unpack.
And yeah, this really is the core question, isn't it? I mean, Bitcoin is at $90,000. The numbers are absolutely incredible. And yet, if you talk to a lot of retail investors, the feeling's kind of underwhelming. So what's causing this huge disconnect?
Okay, so let's get right into it. We're looking at a brand new crypto paradox, the high price, low hype dilemma.
First things first, let's just let that number sink in. $90,000 for a single Bitcoin. I mean, no matter how you slice it, that is a massive milestone for the asset.
But here's where things get strange. On one side, you have the market price screaming all-time high. It's a huge jump from the 50 or 60K range we saw last year. But then, on the other side, you've got investor sentiment, and it's just unsatisfied, disappointed even. It feels like expectations have gotten so sky high that even record-breaking prices aren't enough to trigger that classic crypto euphoria.
So what's behind this shift in mood? Well, the answer, and it's a big one, lies in a fundamental change in who is playing the game now. The institutional wave isn't coming anymore. It's officially here.
Seriously, if you remember just one thing from this, make it this. The single biggest change in 2025 is massive institutional adoption. The crypto game has been completely rewritten. The big money is here.
So how are they all getting in? The main on-ramp is the exchange-traded fund, or ETF. And let me tell you, this has been an absolute game changer. It's like a brand new, super wide highway for large US institutions to drive their capital right into crypto. And if you need any proof, just look at this quote from JP Morgan. Yeah, that JP Morgan, an institution that used to be a huge Bitcoin skeptic. Now, they're actually telling their clients to allocate a piece of their portfolio to crypto. That is a seismic shift.
Just think, the old advice from Wall Street was a simple 0%. Don't touch it. Now it's 1 to 4%. And I know that might not sound like a lot, but when you're dealing with trillions of dollars under management, even a tiny slice of the pie is an absolute tsunami of new capital.
Okay, so a tsunami of new money is flowing in. What does that mean for the future? Well, it forces us to ask a really big question. Is the old, predictable 4-year crypto cycle totally broken?
You see, for a long time, crypto has kind of danced to this familiar beat, a 4-year cycle of massive booms and then pretty painful busts. And according to that old playbook, 2026 should be the year that things start to cool down. But as we've been saying, this time just feels different. So what exactly is throwing off that old rhythm? Well, there are a few key things going on. U.S. policy is definitely warming up to crypto. We're hearing a lot of talk about potential interest rate cuts, and on top of that, there's a real push to keep the wider financial markets looking strong, and that good mood usually spills over into crypto.
You put all of those factors together, and it could be creating what some people are now calling a super cycle, a whole new era where those old rules of boom and bust just don't apply anymore.
But look, this isn't just about price charts. The entire crypto ecosystem is growing up. And a perfect example of this is a major player like Binance. You know, most people think of Binance as just an exchange, a gateway for new users to get in. And it is, but that's only half the story. It's also an engine, driving real innovation and development across the whole ecosystem. If you look behind the scenes, they're building the foundation for what's next. Things like the BNB Chain for DeFi, investment labs that are funding new projects, huge education programs, they're even doing policy-level work to help get crypto adopted all over the world.
But honestly, the biggest sign of maturity might just be this new spirit of collaboration. You can go to industry events now and see rivals, competitors just hanging out, working together. Everyone seems to get it now. A rising tide lifts all boats.
So with all that said, how should you, as an investor, navigate this new world? Let's put together a simple playbook. Here are 4 key rules for this new era. First, educate yourself. Learn the fundamentals, wallets, security, DeFi basics. Second, start small. Invest little amounts so you can learn without all the emotional pressure. Third, manage your risk. Here's an easy test. If a price drop keeps you up at night, your position is too big. Simple as that. And finally, number 4, be patient. And that last point really brings us to the most important piece of advice. The wild, chaotic days of crypto might be fading.
In this more mature market, the real winners will be the ones with patience, discipline, and a long-term vision.
When you boil it all down, the story of crypto in 2025 is really about an industry growing up. It's moving from being a collection of separate experiments toward a truly collaborative ecosystem. And when that happens, everybody wins.
Which leaves us with one final big question to think about. As crypto trades its hoodie for a suit to welcome Wall Street, does that mean the era of explosive, chaotic growth is over? Or, with all this new money and legitimacy pouring in, is the biggest chapter of this story actually just beginning?